years, the stock market has been one of the best performing markets in the world. And in fact, the best performing asset classes as compared to, say, the MSCI emerging markets or the MSCI World Index or even gold. I mean, the market has gone up in US dollar terms by about 750%, which over a 10-year period works out to about 60-65% per annum in dollar terms. The reason I said 1998 was because 1998 was when we had the nuclear test, and that was a very negative period, negative time for Pakistan. And today again, similarly, we are seeing another very negative time, negative period for Pakistan. So the question that you're asking is, what is my outlook on the stock market? That has to be seen in the context of where the stock market is at this point in time, which is that it is going through a bout of extreme pessimism when the economy is going through turbulence. Broad economic indicators are trending in the negative direction, and the business confidence is low. But yet, what we're seeing is that if you look at some of the core companies that constitute the stock exchange index, which are very large dominant players, you have banks, you have cement companies, you have fertilizer companies, you've got telecommunications companies, and you've got companies in paper and packaging, food businesses. All these companies are growing, and despite all the difficulties that they face in the business environment, whether it's rising energy costs or interest rates tending to go up, or tough business conditions, or the law and order and insecurity situation, they've managed to figure out a way to manage those risks and still continue to expand. So in a market where values are depressed, but where the underlying where the underlying companies are going through growth, that is a very positive sign. And if you recall, when the stock market floor was imposed, we manage assets for retirement funds, and so one of the retirement funds that we were managing assets for, their values had gone down, and the CEO of the company called me up and said that, look, what is going to happen to our portfolio? And I said to him that, look, the companies that you own in your portfolio are very high quality companies, and their sales and their profitability is still going up, irrespective of whether there's a floor on the stock market. The floor on the stock market is a very different situation to the fundamental future prospects of the company. And then I asked him, because this company was a shoe manufacturer. So I said that, there's a lot of turmoil in the markets. Can I ask you that, this quarter, have you met your budgets in terms of, selling shoes? And he said, well, it's surprising because we have had our best quarter ever. So I said, well, if you've had your best quarter ever, and if your stock price has gone down by 50%, what would you do with the stock? Would you buy it or would you sell it? He said, well, I would buy it. So I said, well, that is also true of the companies that you hold as well. So I don't know if that answers your question.
Yeah, that does. And the other question is, what are your favorite sectors?
What are my favorite sectors?
Yeah, well, if it comes to the stock market, which sectors do you think I would better invest in?
Yeah, I think it's not a question of what are your favorite sectors. I think it's more a question of like what are your what are your best companies, and I think the companies that we tend to own are companies which have the ability to weather the storm and have a good market share in their industries. That the basic industries, even though they may not be growing in size, the dominant players have the ability to withstand that difficult period. That's one thing. I think the second type of company that we like is companies that have strong cash flows and have currently where you have perhaps an increasing interest rate environment, and that the state bank may be following a more tight monetary policy. Companies that have cash balances are also companies that will be able to boost earnings. Then thirdly, we are in an inflationary environment, so we think that prices will continue to go up, both in terms of inputs as well as outputs. And we like companies that have the ability to pass on the price increases to their customers so that they can protect their gross margins. And lastly, we like companies that have exceptionally strong management teams and a very focused strategy, so that there is some predictability about what is there in the future. And I think there are companies. I would have to say that most of the companies, when I talk about these criteria, the companies that sort of fit into these criteria in banking are companies like MCB, public sector banks like National Bank, UBL. Then you've got in the cement sector, players like DG Khan Cement, Lucky Cement. Some of the smaller players also, Chirat Cement, I think, very good. Then you've got companies, but they're not very traded, are like Packages and Nestle, Unilever. Then you've got fertilizer companies like FFPL, Fauji Fertilizer, Engro, Lotte, Pakistan, which is not industrial sort of sector.
It's been high volumes have been traded in Lotte for quite some time now. Basically, what's the reason in that? What do you see the reason?
I think it's got a large free float, and then because it's a low price stock, it tends to attract retail investors who feel more comfortable trading a low price stock rather than a PSO or a MCB type of stock. And then you've got these petroleum companies, because the oil and gas sector is a very healthy sector for Pakistan, because there's always a requirement for imports. Everything that these companies produce is sold. There's no risk of anything sort of operating below. I mean, it's not like the cement sector where capacity comes in and suddenly you've got excess capacity and prices go down. I mean, no matter how much they produce, everything will be consumed. So I think on the demand side there is a lot of compulsion to produce more. Secondly, we do have these companies that have good oil concessions, and so with discovery rates showing improvements and more discoveries coming in, the overall production of oil and gas will continue to go up. And then these are companies where the management teams have been there for many years. They're very stable management teams. There's no risk of volatility that these companies are going to be badly managed and so on. So I mean, even though some of them certainly can be more efficient, like OGDC, but companies like POL and PPL are extremely good stocks.
As we've seen in the recent, like 2008 event, the market fell really badly.
Yeah.
Are there any factors that can lead to a downturn like that? Do you see any factors in the future, not in the near future, maybe like 4 years time, you can see another big fall in the market?
Yeah. Well, I think first of all, it's important for any stock market to have macroeconomic stability. I think right now, if you look at the most recent, State Bank quarterly report, or the monetary policy statement, they increased interest rates by 50 basis points, and one of the reasons for that was that there was rising inflation. Now, we've had obviously food prices go up, and we've had electricity tariffs go up, and then some of the subsidies being removed and so on. So on top of that, now we have the recent floods. So all these things will not only create shortages, but will accelerate inflation. Now, inflation is a very bad thing because when you have inflation, your value of your currency is eroded. When your currency is eroded, your debt servicing goes up because your interest rates are high, and your currency is weakening. So it's a vicious spiral. Now, we have not reached a point where we have hit that point, but certainly those concerns are there insofar as the consequences of a high inflationary environment are concerned. A couple of days ago, the Prime Minister said that we are heading towards a period where there could be 20% inflation now. I don't know the basis on which he said that or made that statement, but it's a very dangerous statement to make, I think, because if people expect that they will, right now the inflation is around 13.5%, 12.5%, 13% or whatever. But if people expect that there will be 20% inflation, they will behave differently to if they believe that there will be 13% inflation or 9% inflation. You see, because it comes into when you take business decisions, you have to take costs into account and your expenses. So the question that you asked was that will the stock market go down?